Good evening, everyone. My name is Paul Young. I'm just going to walk you through foreign direct investment with the perspective of looking at Canada. I will touch a little bit on the world, but I'm mostly going to specify just foreign direct investment into Canada. Now, my opinion in this presentation is one perspective. It's not the only perspective, and you're more than welcome to go out to different websites to kind of do a search on foreign direct investment to get a more of understanding of what it is and how it actually works for countries. Here's a little bit about myself. I'm 25 years in experience in business, so I've got a background in academia, industry, as well as financial solutions. Now, what my agenda will be, we'll be talking about foreign direct investment. I'll talk about Canadian stats for 2015, and I'll talk about the top 10 jurisdictions in North America. So what is foreign direct investment? There's two types of foreign direct investment. There's indirect or direct. When you start getting into portfolio management, and that's where you start seeing entities like Canadian Pension Plan invest pension fund assets in the companies overseas. That's the investment side of outbound cash and capital in terms of getting returns for the markets. There's also what we call basically direct investment. This is money coming into companies that's used as part of either R&D programs, expand capacity, bring new mines online, new oil production facilities, new mines, new forestry mills. That's part of the direct investment. So it's very critical to understand that. The second thing is that you need to understand very quickly in a succinct way. Foreign direct investment is very, very competitive. To attract it means it's got to be multiple policies. So as much as you hear this in Canada's case with the low corporate tax rate, which is some of the lowest corporate tax rates in the world, that's only one factor. It's also about R&D programs, which are part of the taxation policy, but it's also getting into other aspects of government policies, from regulation to getting projects off the ground in terms of the flow from the municipal, provincial, up to the federal level. That's all part of it, and it's also a part of stable governments and stable government policies, because if I'm making an investment, I'm taking a risk, and I want a return for that risk. So I want to assess where I'm going to get bang for my buck. And remember this, most of you have mutual funds or even have Canadian Pension Plan. You want a return of that money because that impacts your future payouts, and that's something you need to bear in mind when you're talking about foreign direct investment. Now, in particular case, this is just looking at inbound I should say, and what you're seeing here is the US companies make the biggest significant investment in Canada. But what you should be watching out here is you're seeing the Netherlands, you're seeing China, you're seeing countries like the UK, Brazil, and all that. Now, if you break Canada out in a succinct way, a lot of that investment's coming into areas like the oil sands. It's coming into mining operations, manufacturing operations, even clean technology to leverage the cash to kind of look at things. So when you look at things in general, Canada itself had about $1 billion going outflow and only about 770 million coming in an inflow. So we're actually seeing a net investment go out. Now, that being said, take a step back. A lot of that money going outflow is handled by the financial service sector, which is insurance and banking sectors, because banks are looking at investments, they're looking at their foreign holdings, and that's part of that outflow. As well as when you look at your mutual funds, you will see where there's companies or investments in foreign subsidiaries outside the world. So there is a global input of some of your RSP stuff in your mutual funds areas, and something needs to bear in mind. The other thing too is one of the major contributors in inflow into Canada has been manufacturing. We've seen a 3.5% growth in that area, and that's something to bear in mind as well. Now, we're seeing pressure point, and I'll get into this later on in the slide as we move into 2016 in different sectors that may see a less and less influence of foreign direct investment. Now let's talk about the 2015 ranking. Now, if you see here, the top jurisdictions in terms of where money was flowing was California, New York, Texas, Ontario, and Florida. Now, let's stop there for a second here. California is big into the clean technology area, so it makes sense where you're seeing a lot of that investments there. If you look at Texas low taxation and some of its policies have helped key sectors like automotive, heavy equipment, forestry, and even the oil and gas sector have helped Texas, and that's why you're seeing it there. But the thing that you need to bear in mind, which isn't said here, even though Ontario's ranked in the top 4, it's actually seen in a year-over-year change a 4% drop. Now, most of what you're seeing in Ontario's particular case is you're seeing basically investments in key sectors like clean technology, automotive, and food processing. Now, look at Quebec. It's on this list, but it's near the bottom of the ranking that's tied with Massachusetts. Now, Massachusetts is typically a technology state, so that's why you're seeing a lot of investments in that area. Quebec's case, their focus is more on aerospace, food processing, metal fabrication, power generation, and clean technology. So that's where you're seeing those key sectors benefiting. Now, Quebec's got a taxation issue there where you look at their personal income taxes and all that, but they do a lot of good work in R&D area, and even their corporate taxes are pretty well fair there. But because they leverage a lot of technology in key areas like Quebec City and Montreal, that's where they're seeing a lot of key investments being made strategically in those areas. So what's going to happen in 2016? We're still going to see a period of low commodity prices, and that's going to impact a lot of the key mining sectors like nickel, iron ore, and all that. You're going to see less and less investments there. However, key sectors like vanadium, lithium, graphite, rare metals are going to see, and we've got huge deposits of vanadium in Quebec, lithium basically Ontario as well as Quebec. We're seeing graphite grow in importance. New Brunswick's got significant holdings, and even Ontario's got holdings as well. Rare metals is a large find in the Northwest Territories that's slowly being developed. And why am I focusing on those materials? Because they drive clean technology, they drive advanced materials, and those are areas to focus on because those are the growth areas. Automotive sector itself, you're going to see some pressure points there too, because a lot of the new capacity is being added in Mexico. Forestry is going through a little bit of revolution with coal generation. You're seeing key investments in there, as well as investments in areas like specialized paper. You're seeing mills like that being modernized to handle that. And we're also seeing sizable housing starts have improved in the US and Canada, as well as the export market, which will benefit forestry and lumber mills. Aerospace is an up and down sector. You can go a few years where you see actually a decrease. We may see some uptick in 2016 due to the fact that some airlines are in their replacement cycle. Food and agricultural sector, we've just seen TPP, which is Trans-Pacific Protection Agreement, come into play, as well as their trade agreements, which will benefit agricultural related industries. That's coming into play. We have a change in government in Canada now that's decided to put a little bit more emphasis on clean technology. We'll see some of that investments now come in. Now all that does is take it to give it to companies. It doesn't mean it's going to come to market quicker. It just means there's a lot more activity likely to happen in the R&D area in those sectors. The Internet of Things is another area that's driving things, and this is where we're getting more into monitoring, and it's an area too that likely will see a lot more capital coming in. Now, I did this presentation to kind of give you an overview of foreign direct investment. The sectors are likely to see some benefits. If you notice here, I haven't highlighted the oil and gas sector because it's still going through. Prices are 30% below where they are. We're starting to see a rebound. We may not see oil prices hit $40 a barrel. So you're seeing a limits to what capital investments happening in that sector. Also, until the federal government, Canada, comes up with their pipeline policy, that's going to impact how exports of energy go outside this country, and that's something you need to bear in mind too as well. Will they figure it out? Likely this year, because like anything else, governments need revenue, and this is critical to drive this, and they need that foreign direct investment to help get goods to market, and it's something to bear in mind. Now, as I said earlier with this presentation, this is only one perspective, foreign direct investment. It's not deemed to be the only perspective, and I would encourage you to go out there to the internet and do your own search on FDI or foreign direct investment and to get your own perspective. And I also would encourage you to call out politicians and ask how are they going to help bring more foreign direct investment into this country, because it impacts the balance of payments. Is if we're allowing more capital to go out, that impacts the cash going outside this country, and that's critical to understand that when you hear the discussions of balance of payment, because foreign direct investment impacts that. Now, as I said, if you've got questions or anything else you want to go out there, you may want to do a bit more research to make sure you clearly understand what's going on with policies. Thank you.